Hello again. I'm here um to talk about another chart. I actually read this news, bad news for Adidas. It's that it seems that their projects, its first annual loss in over 30 years. It has this first annual loss. So into the key points, it says Adidas has warned investors that it is likely to report an annual loss for the first time in more than 3 decades. The loss has been caused in partly by the fashion brand, blah blah blah, and one artist. It was a project um, for that, and its new CEO Bjorn Golden said that 2023 will be a transition year for the company, and it is really bad news for this company because yeah, they have a lot of fans. They produce good stuffs. So anyhow, let's jump into the chart. I would like to analyze their stock chart using technical analysis as always via price action method to see what is going on here. As always, I start from weekly view to get a bit of sense of the history. Not zooming out a lot. What I'm saying is a very huge impulsive wave by not just zooming out a lot. So, um, however, when I'm seeing this, it I'm wondering if this impulsive wave, which is a very huge wave, I'm wondering if it is a correction or not. That's why I zoom out. That's the only reason, just to find the initial wave, the initial point of the previous wave, to see how much it has been corrected. So here I'm seeing that it has been corrected over 78 percentage, or maybe even more than 80 percentage, and this is not common at all for as the correction. That's why my first sense that it is an impulsive wave might be correct. So, however, I can see that period to this price reacted to this level of the golden ratio of this Fibonacci extension level, and also it's actually taking my attention as well. So first of all, I would like to draw this support zone. It's a very historical zone that price just reacted. You can see that it used to be a resistance many years ago, and it used to price used to react several times, but from a time it just got broken, and now it is behaving as support. That's one thing. Let's get rid of these Fibonacci retracement uh, levels. I know that in these 61 percentage, I used to see a very important zone. You can see also it used to be a resistance initially, but after the breakout, price now, again, according to the polarity principle, price started to react as this level started to be as the support, and price reacted to that, bounced several times from this level, and now another breakout to the downside to that historical level. And now we are again reaching this point, which seems to be acting as resistance, but we'll come back to this. This is the most important point of our chart, right? We want to have a great understanding of this part. So surely we will come back to this. Anyhow, from the weekly view, I think we are okay, and we know that this was just clarified that it was over 56 percentage. Uh, uh, sorry, 70 26 percentage of people level, 78, I guess. So, um, I think we are good to continue moving on. So I just zoomed out this much to just find this critical zone here. But what we are interested in is this part, just two or three previous waves in the weekly chart. I'm happy about what we have already found. Let's just jump into the daily chart. I just let me zoom out a little bit. Let's before going to this part, which again is a more important part, let's find out what kind of impulsive wave it was. Try to count the waves because we know it was some sort of, it is not going to be a corrective structure anymore because it actually corrected the previous wave over than 78 percentage. Let's see if we can actually see any sense, any kind of information that it is impulsive. What I'm saying is that yes, it is the five wave. I can clearly see it here. Uh, Let me just change the color to my primary preferences. It is an intermediate wave, so I can clearly see one, two, three, four, five. Um, let's just dig into each of them one by one to really understand what happened in the history. I can see the second wave was the regular zigzag sharp correction to top. So yeah, it is an minor ABC. It is clear. This third wave, hmm, um, I can now try to understand to rethink about this one. Prior to start streaming, I actually um, had a look at this chart, but I went through the same way of counting. But after just looking more to that, I felt that okay, this correction, this is not a normal correction. Maybe I can actually say that it is some sort of uh, descending triangle because as we saw here, we had the sharp correction. This is common that as the fourth wave, we are going to have some sort of side wave corrections, can be flat, can be any kind of triangles. But anyhow, if I just dig into the details, if I draw them correctly, it is not really, it is look like a falling wedge or something like that, not a triangle. So that's why I reconsidered the way I counted these. And I guess this is going to be the final destination of the third wave. And this is my fourth wave, uh, as I guess. Let's jump to this one because, as I said, we had this corrective structure, zigzag, but let me just, uh, for a short time, just jump into the hourly to see more details of that. I can see that this is a symmetric triangle. Clearly, I can draw two straight lines over these. And also, you know that the triangles have five waves. Each is three. So we have three, 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 three. If I want to utilize it, you can see the pop-up that is a Elliott triangle wave. So I can count this as A, B, C, D, and E to the top here. And each of these are ABC, 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 and A, some sort of flat as B and C to the top. So with that information, I guess I found my fourth wave because if I again zoom out to the daily chart, I was wondering that how I should count this. I found my corrections. This is helping me to understand, okay, this is the first one, this is the third one, and this is the last wave. How about this third wave? Can I count it in somehow? Uh, if I just take a closer look at this one, I can see that this is the A, this is the first one, this is second one, this is the third of this third wave, this is fourth, and this is five. Let me just change their colors. What I'm counting is it really important? That might be the question. The answer is it might be sometimes helpful, especially here, because as I said, the whole impulsive wave uh, just uh, corrected the previous impulsive wave more close to 18 percentage. So it is important that I really understand if it is an ABC wave or it is a one or two, three, four, five. So then I can continue with more confidence to have a better understanding of the history. Of course, it is going to be beneficial for us not to understand what is going on at the moment in the market, but to understand the history, and it is of course will be beneficial. About the second wave, I can see again in these minor waves of the intermediate third wave, I can see here the second wave. Just quickly go to that. It is some sort of a descending triangle. Uh, of course, it can be seen if I draw it a little bit better. So here was the destination of my first wave. So it created that triangle, and the fourth wave was a normal zigzag in one the ABC one. So having that these details, now I'm more confident that it is one. This is an impulsive wave, downtrend bearish impulsive wave. So with more confidence, I can continue moving forward. Let's now zoom in a little bit, going back to where we are most interested in with this information that we had this five impulsive wave here. After this, um, probably we are going to see some sort of correction, right? So what I'm seeing is some sort of an ABC, as we found this level in the weekly view initially at the beginning of our um, analysis. I can see that this is some sort of again we need to always ask this question: is it a one, two, three, four, five, or it is just an ABC, just a simple correction? For answering that, I first need to jump out again to the weekly, zoom, just shrink this, and let's use this Fibonacci retracement again, but now for this impulsive wave, because now we know it was an impulsive, at least we are thinking. There is no promises here. We are just trying to understand, right? So I can see that it has been corrected to only 23 percentage of the people level. Yeah, of course it is possible, but it is also hard to say that this is just an ABC as the correction of this whole wave. Um, it is not usually common. The golden ratio of Fibonacci level is 61.8 according to the theory. However, sometimes when that impulsive wave is so strong, I mean this downtrend, it might be possible that we only reach the lower levels, like half of the wave, 38 percentage, or 23, like we are seeing here. Um, how can I judge this? Simply because we're using price action method. Let me just reset the view. I can see that just look at this third wave, how strong it was in the last impulsive wave, and just look at this correction. If I remove these retracements that we just draw and try to understand what is the uh, correction rate for this third wave, you can see it was this small triangle here, and it didn't even reach the 23 percentage because this downtrend was so powerful. That's why also the whole trend, just as one wave, one big primary wave, it reached to 80 percentage of the last previous one. So all these things that we found in the weekly chart, they're all indicating that yes, it is so strong. This downtrend is so strong. So what they are announcing in the news, yeah, we are seeing the same in the chart that we are seeing that in the last uh, few years at least, they are actually um, having a very powerful downtrend that we couldn't see if I go back to the weekly, because in the news was that for 3 decades they didn't have as such. So they started from here, always just uh, it was increasing the value, just if you forget about this drop here. But now we are seeing a very this was an emotional, you can see just in a few weeks how it just dropped but recovered that. But this is more logical. So by seeing the price action, as we're using price action method, we can understand that okay, this is more stable and more powerful downtrend here. So it might be possible in the end, our conclusion is that it might be possible that this 23rd, I'm not going to bring up that Fibonacci levels again, but it is possible that we can see this is the only correction. This is that the ABC of that whole wave only up to 23 percentage. Let me zoom in a little bit to continue. We want to have a conclusion of okay, what is the status in the end? Let me just draw a thread line. Let me just adjust this to have a better view. You know that this is a support zone. Let's draw another thread line, the top of this channel or ABC. Still, we cannot argue that if it is 1, 2, 3, 4, 5 or ABC, but I would like to keep that open. In my case, in my belief, if I look at this first wave and the second wave, I cannot imagine that this small one can be something similar to this one. It is more give me a sense that this some sort of uh, symmetric triangle is a part of those minor waves. I didn't want to jump into the details, but I guess I've just opened it, so I will finish it up. I would say this is an ABC, but I wanted to keep that open. But let's talk about it. This is the let's change the colors to my preferred intermediate one. This is the intermediate ABC, and what I'm saying, what I want to say that this C, this wave that we might it might confuse us that it might be not an ABC, just 1, 2, 3, 4, 5. It is because this C wave, we have some sort of a 1, 2, 3, 4, 5. Now I can see in comparison. Sorry, this is the one. This is the two. I can jump into the hourly view to see more details here. This is 1, 2, 3, 4, 5. I now it makes more sense that this corrective structure is the part of the same wave, because the second wave is much similar as length to this one. This is actually can be counted as one way. But if I say that okay, this is the fourth wave and this whole is the second wave, hmm, I really cannot convince myself. But again, let's get rid of this. Now we have a very crowded chart. I'm not really fan of doing so. Again, I would like to keep that open. How we want to count it, but as I understood that it might be the finish line of the correction of that whole powerful impulsive 1, 2, 3, 4, 5 here. This can be an ABC. Anyhow, what we are seeing after drawing these two trend lines, the most important thing is that I'm seeing a rising wedge. Rising wedge is a chart pattern that is a reversal. It is happening when you actually try to draw the uptrend, the upside of the channel and down the bottom side of the channel, you will see that they are some sort of symmetrical, and this is a sign of that okay, this uptrend is not that much powerful, because as the lowers are jumping up but the highers are not jumping up as same. That's why it is like this. It has a less angle, and that's why it is creating this rising wedge, which we are expecting to be broken on the lower side always. And you can see here with a huge gap, it just broke a few days ago. I don't know how many days ago it was, maybe 3 weeks, 3 weeks ago. And after this breakout, I can see a retest. This is very important that price just retested this structure, this broken structure. And we know that trend lines also are support and resistance. You can see that how these trend lines several times um, used to uh, be counted as a support, but now after breakout, we can see the polarity principle as we used to see most of the times on these horizontal support and resistance zone. But here also we can see how it is reacting now. It is changing its behavior after breakout. This trend line is still valid, but it is changing its behavior as the resistance. So um, this is the retest. Also, we can see that price is moving up and probably might have a second retest to this one. So, closing to our conclusion, we have this very strong resistance zone. We are seeing a rising wedge. That's a second confirmation. We are seeing a breakout. That's a third confirmation that this trend is done. We are seeing that it has been reached to the 23rd percentage of correction. That's a fourth indication. We are seeing two kind of retests, at least one here. That's the fifth indication. And I would like to bring up my MACD here. I don't usually use indicators when it is the price action because I'm using price action method, right? We're just looking at price, not using them. But I usually use one of these oscillators. My preference is MACD to just confirm the end of trends by finding divergence. Divergence divergence is happening. If I zoom in a little bit again, when price created a higher highs like in an uptrend. So this is my high. It created another higher high, but we are completely at the vice versa situation. Just at this point exactly, I had that high, but after creating that higher high on the price, I'm seeing a lower high. So this is what is known as divergence. So, and this is my, I don't know if it was my sixth or seventh or eighth indication that this trend is done. So we know all of them. Let's close this MACD again. Uh, I know that it is going to be a reversal. So my conclusion, I always come with three type of conclusions: short term, mid term, and long term. For short term, I can say that yeah, maybe we actually go to this level again, as I just discussed, to create a double top pattern. That's a possibility. But anyhow, after reaching that, just the time that this hourly structure get broken, doesn't matter if it continues up and then break it, it might probably return to some points here. So this is my short-term conclusion after this analysis. Also, these chart patterns can help me to give me some sort of targets. The length of the rising wedge, we have it here still. The length of these after the breakout, oops, I guess um, I lost the chart. Um, let's try to. I don't know what happened to these, but I think this is the one. Yes, we are back. So um, here, the length of this rising wedge, it's I can now move it from the time it just broken. This will be the target. The same amount of the length of the wedge from the point that it has been broken, it will be the target. So the short term we talked about, I will jump to the daily, just zoom out a little bit. Just let me get rid of this. Oh, come on. I don't know what is happening to my browser today. Uh, let's bring this chart again up. Let's get rid of these shapes to give me some space to breathe. I really cannot breathe anymore here. A lot of things we have drawn. It is always a good practice to keep your chart clean because just adding a lot of stuff will not really help you. It will just create confusions. But anyhow, as a midterm, I'm expecting that regardless of that short term, just going up and down, my expectation is that it is going to be here um, as the so it's I'm with that news. That's yes, the situation for this company, it seems, according to my analysis, of course this is my personal opinion, but it is not so good. But let's look at the long term just as my last conclusion. Just reset the view. I would like to get rid of a lot of things again, and now I'm seeing that this is happening again. So, but I know how to resolve it. Doesn't matter. Let's get rid of these things. Maybe I'm pressing a wrong button. Uh, Maybe it's not. It's my problem. Let's get rid of these waves and the stuffs. Okay, clean enough. Um, I know that. Let's bring the last wave. I think that was the most important one that I've removed. I know that it was the fifth wave, impulsive five wave structure here, the downside. After this correction, we already said that this is going to be the midterm target for this chart or this stock. But about the long term, after that happening, I have two scenarios for that. One might be the continuation, the obvious one at least, because this was an impulsive wave. Then I'm going to have an ABC, as we discussed and drew previous time, and now we are expecting the second impulsive wave, the third wave, which usually are more powerful than the first wave. So we are going to see a breakout and continuation, but also do not forget that it was only 23 percentage of the correction. I can also come with another scenario as a side wave correction. So I'm going to have a flat here. So this ABC in the end can be actually drawn something like this ABC as the flat pattern, this range market here, that can be our side wave correction. And it might be continued because these flats, this side wave correction can be doubled. I can show you here in my toolbox here. We have alias double combo wave or triple wave even. So it means that this whole ABC can be counted as W, and then with a link called X, we can have another ABC as Y. So this kind of range market, according to the situation of the company, this can be continued. We are talking about a very long range. If I come back to this chart 1 year later, I'm still might not see this pattern. But what I want to say, what I want you to take away is that in the long term, we can have two possible scenarios. One is a breakout and one is a retest. But I want to tell you that it has um, interpretation from the Elias sweep theory as well, that this ABC might be only the first wave are flat, that can be ABC as A, ABC as B, and ABC as C, and we are going to see a flat range market if company can hold the situation somehow, because it seems that what they are announcing is so frustrating. Anyhow, I think we are done. We came up with all the scenarios that were possible. We also discussed about the short, mid, and long term. Um, Thank you very much for watching my stream. If you have any question regarding what you saw, I have a Discord channel. You can always ask questions there. I will actually respond to them as soon as I get a chance. Also, you can see my previous streams on YouTube. Also, I'm streaming simultaneously on Twitch and YouTube, but on YouTube they will be saved there. You can always go, and I will be grateful if you send me some feedback as comments if you have any. Anyhow, thank you very much for watching. Thank you very much and have a nice day.